Apple process for Tesla's battery day adds between $50 and $100 billion in market cap in 24 hours. This is Greg for Teslafaninsight. Thanks once again for joining us. Wanted to note our show is primarily provided by our Patreon supporters. If you enjoy the show and would like other information, including classes and discounts on those classes, on trading and other investing, as well as daily shows that assist you in your trading and investing, please sign up with us at Patreon. Information is below. The focus of today's talk is the fact that on Tuesday it's battery day for Tesla. What's going to happen is Elon is going to introduce a number of new initiatives that I think will add a lot of value to the whole conversation of Tesla. The question that comes up is, what impact will this have? Now, the driver for this show was the stock price is up about $50 in anticipation of Battery Day. Two huge discussions going on about Battery Day by a number of people for months, and then Elon hyping it up further. So we have a number of things that theoretically have added about $50 per share to Tesla stock. Maybe that's $10 or $15 billion in the process. So the question mark is, what's going to happen on Tuesday after the announcement? And what the options are saying is that Tesla's stock price is going to rise by $100 based on the revelations brought forward by Elon. And the answer to that is that there's everything from nothing will happen to it adds $100 a share to it deletes $100 a share from the stock. All of those possibilities are on the table. And we want to kind of explore what's going on, why, and what's likely to happen. So the title of the show referenced the Apple process and Tesla's battery day. What the Apple process, you'll notice, is that years ago, Steve Jobs came up with this thing where he announced the iPhone in January, and they started deliveries in June. How much time was that? 6 months. What did it do? It resulted in a large number of competitors working on and delivering products somewhat in line with when the iPhone arrived, maybe a couple of months later, and a bunch of lawsuits, etc. So what you'll notice is that Apple actually switched strategies. What they'll do now is that if they don't have a large number of inventoried phones or whatever the devices might be, what they tend to do is not do the introduction until then. So the trend is that Apple announces or introduces new phones or devices are in your hands within 30 days. The strategy behind all this is just the fact that by delivering in that time frame, it helps you in a number of ways. Obviously, your revenue increases is the most obvious. Another is that competitors now have 6 months of development time that they have to go through before they'll be ready to deliver a product that mirrors Apple's new capabilities, avoiding the loss of customers over the longer haul, but not in the shorter haul. So the net benefit of introducing new ideas, new products at one point, and then having them show up 2, 3, 5 years later is that everyone knows there's going to be benefit. The challenge is that when you put that gap time in there, you allow individuals to close on you, and your buying public doesn't have a whole bunch of respect for that process. So I wanted to sort of run through those with you because let's bounce over to Tesla. Now, you could argue that the Tesla introduction of Cybertruck was somewhat in line with the Apple process. Notice that they get all that news press and coverage without any cost, just like Apple did under Steve Jobs. But one of the key differences is that Tesla still hasn't picked up on the whole idea of building inventory before you make the announcement. And so this is the concern I have about how Battery Day is going to roll out. So in essence, if Tesla made an announcement and said, guess what? We have a brand new battery, and the difference it's going to make is X or Y, and we're going to deliver it, start delivering those vehicles in 30 days, the stock price will actually go through the roof, because the market impact of that news would be unbelievable and instantly push the stock up at least $100 in that $50 to $100 billion market cap zone. On the other hand, if Tesla comes out and says, we have all these new innovations, we actually don't have a factory yet, we're hoping to build one soon, and sometime in the next 3 to 5 years, you'll get that vehicle, that will result in the stock sort of crashing upon that news. So I believe that the biggest impactor that Tesla could have is to arrive with the announcement that they now have breakthroughs in both technology, software, and raw materials that allow them to lower the price of the entry-level Tesla at or below $30,000. So why is this big? Well, it turns out that the entry level for Tesla is about $40K right now, $42,000 or $43,000. What happens is every time you drop the starting price by $10,000, and sort of the battery and all that technology is the core level of costs, that's when you actually increase your usable population of potential buyers by millions of users. So that $30,000 price hurdle is a huge one. An even bigger one, obviously, is $20,000, because there are all these new customers that you could not have serviced previously profitably that you can now. So for us, that's how the sort of the biggest news impact potentially of what's going to happen with Tesla. So what's the likelihood of that occurring? Well, given that Tesla is focused on building in Germany, and they're also building a new factory in Austin, Texas, it seems that there's an emphasis on new product development and delivery right now. I guess you could argue that all those new products are going to use, theoretically, the battery solution that Tesla is producing. So therefore, it'll get baked into vehicles earlier than later. But again, if in fact we deliver something and then we have scale quantities of that solution hitting the marketplace in a fairly short period of time, I think that's when you get the buying public's attention, along with large numbers of reservations, and you get the investing public's attention as well. One of the reasons or thought processes that I had for doing this show is the fact that we kind of try to emphasize teaching people Peter Lynch's techniques relative to his investment process that he built Fidelity on. One of the challenges that's popped up with Tesla is, think about it, Tesla's low for the last month is about $300 a share. It's now at about $450 a share, or, that's darn near a 50% increase over a 3-week period. So I've really kind of emphasized trying to avoid trading options or that side of things when it comes to our public channel. We discuss it in our Patreon area a lot. But basically, if you're not a little bit dabbling in options, or you at least using them to hedge your position, if you own the shares, I think you're putting yourself at a severe disadvantage, because when a company is moving, call it 50% in value in 3 weeks, it's a sign that there are other tools and instruments you need to use to optimize ownership, rather than just emphasizing the traditional investing process of just buy the stock, hold it for several years, and figure out what's going to happen from there. Because, there are theories like buy the dip. If it dips heavily, you might want to buy there. There are also theories of, if there's bad news on the horizon, you really want to let it dive. Another component of this investment side of Tesla relative to Tuesday is it was our expectation that what was going to happen is that Tesla would ride down to about $300 a share, and then it would sit in that range for at least a month or two, maybe 3, as we saw production and sales numbers that supported the validation of valuation at a certain level. Well, as you know, and you can see in the stock price, something really amazing happened, which is that Goldman Sachs announced that they were able to get tracking of the data related to new signups for Tesla software to help operate their cars. And when they looked at that data, they saw a beat on the numbers when it came to Tesla sales. And therefore, they put out a note that's resulted in the last, let's say, $50 or $60 in price increase, combined with what's expected when we head into Battery Day. So another sort of investment entity to note that's going on is we're kind of entering one of the ideas we've developed called the 3-day rule. So if you notice on Friday, there were 2 companies that came out with upgrades of Tesla that put it in the late 400s or early 500s in price point. And this is actually kind of a big deal. If you look at how ownership works for most companies of Tesla's size, about 60% of that stock is owned by institutions, 20% in this case by Elon, and then, so that's about 80, and then the rest of it is going to be split, let's say, between hedge funds and individuals. The problem that happens is that when people put out notes like these large research shops did, and they're giving a green light for those higher prices, those institutions are now free to keep buying the shares up into that region. And that sort of underpinning to the stock gives small individuals an opportunity to sort of ride the coattails of the large institutions that are now allowed to buy into that zone. So there seems to be a crisscross in terms of upward impacting on the stock between the institutions now validated in their buying at current price levels, combined with the potential impact and large that a well thought out Battery Day might have as an impact. So we like Tesla. We're hoping they do extremely well. The problem I'm seeing right now is that there's been discussion of Tesla's newest battery being produced in a small line or position within the current factory, which sounds pretty good. The challenge, though, is that what you really need to do is if you do have this new design and you're trying to keep it somewhat proprietary, it limits your ability to get into large-scale production, which therefore could impact a large number of vehicles that are going out. And so, you know, the general sense of what I'm seeing, because we don't have new facilities to deliver this solution to the street immediately and in large quantities, is there's a big hype zone, a lot of excitement, stock prices pushed up a bit, options prices are through the roof currently. But the challenge is that we have the precedent of what just happened with earnings. We were expecting an S&P announcement. It did not occur. Therefore, we end up with great earnings news and no follow-through afterwards, which is why the stock fell between $1 and $150 in little more than 24 hours. So right now, if you look at where we are, Tesla's price to increase by about $100 currently, based on the theta or delta is what I call it in terms of implied volatility. And if that stock price stays in the neighborhood that it is, there's a lot of people who lose a lot of money. But what they've tended to do, if that disappointment occurs, is tank the stock by $100. And I'm hoping this won't be the case. But it's very easy to see Elon going ahead and introducing some really good new ideas. And then he's going to come out and say, just like the Roadster or the Semi, it'll be out there and don't hold us to a date. And that sort of could drag on or not. But the point is that the sooner and faster with which there's implementation of the solutions that he introduces, the more money you and I and everybody else makes, but it also causes movement right away. So logic-wise, in general, we just wanted to introduce the idea here that the Apple process developed by Steve Jobs to cut out the drama was to build inventory, deliver the solution immediately, and have all the good feelings, etc., driven by that introduction and customer response happening immediately and not have it delayed. And when you do that, there are all kinds of benefits that emerge from it. The question is, has Elon figured this out? I kind of think so, because it feels like the Cybertruck is going to be arriving a lot faster than other vehicles have, especially because they had to build a new factory. But at the same time, what I would really like to see to articulate the fact that he gets it in terms of what the Apple process is to say, hey, we have this new vehicle. You can have one in 30 days. Go by the dealership, pay up, and we'll get it to you. Now, if Elon does that, I think that it would be bananas. It would be a huge deal. And I think that they make a lot of money, capture a lot of market share, capture a lot of imagination. Without that, I think that we end up with a lot of people getting really excited, jumping in there, and then you lose that excitement among the stockholders as well as the owners. And then it just takes a long time to get it back when the love is unrequited for so long. So we'll see how all this plays out. I kind of feel like it's going to end up in that really great stuff 2 or 3 years from now zone, but I'm really hopeful that that's not the case and we go the other way. The final part of our show today, we like to do sort of health tips at the end of the show. And so this is our formal ending of our Tesla comments. For today's health tip, we have a friend of the show's that worked in urology as a PA. And he informed me that one of the problems he noticed with his clients was that when it comes to making a lovemaking, one should consider, for men in particular, instead of having that large meal prior, consider having a salad or a very small meal. And the reason is that when you have a very large meal, you have blood flow to the stomach. And it turns out that what optimizes lovemaking for men is blood flow to another part of the body. Therefore, if your body is busy giving blood flow to digesting a large meal, that blood flow is not available to help in other aspects. So what he suggested was, if you are, prior to lovemaking, make a point of eating very little. And if you eat anything, eat a salad or something else that doesn't require a lot of processing by the body, because that'll facilitate a way better experience in the lovemaking space. Might be something to consider. Don't forget your 25 leg lifts. And I also wanted to encourage you to consider a 5-2 or another fasting diet. Also wanted to encourage you to consider eating fat or fried foods solely once a week. Also wanted to encourage you to not go to bed within 4 hours of eating. Minimum 2 allows the food to digest so that you don't end up with all that stomach acid rolling into upper respiratory and creating other issues. Anyway, this is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehitraot, Hebrew, Hoda, Hafez, Farsi, Assalamu alaikum, Muslim, Ni hao ma, hello in Chinese, Zdravstvuyte, hello in Russian, Do widzenia, Polish, Hey do, Swedish, and in Jamaica we say, Nuff respect, walk good man. Thanks for joining us today. Best of luck in the incoming week of investing.